Hello and welcome to NJBIZ Conversations. I'm your host, Jeff Kanige. My guests today are Chris Maher. He's the CEO of OceanFirst Financial and a great friend of the show. Chris, welcome back.
Great to see you.
Great to see you too. And he's joined today by George Destafney, who is the bank's Executive Vice President and Chief Commercial Real Estate Officer. George, welcome.
Thanks for having me.
Thanks for joining me. I appreciate it. I wanted to start off with everybody's favorite subject, and that's interest rates.
hmm
Um, I know it's a subject near and dear to your hearts and to mine too, and to many of our viewers. So I wanted to just get an overall assessment from the two of you, starting with Chris for an overview about what the rate environment is like now and how it's playing out in your business. Chris, what is it like out there now? What are you seeing? What are you hearing?
Yeah, what we're seeing this year is really a normalization to where you would expect rates to be, meaning that short-term rates are a little bit lower than the long-term rates. You have kind of what's called a positive slope to the yield curve.
Okay.
That's a function that gives you an indication of a well-functioning economy, that things are kind of looking that way. When they get inverted, as we had a couple of years ago, that's kind of a sign that there's some stress in the economy. So the outlook for banks, for businesses like ours, is pretty good. We
Good.
we we do pretty well in a positive yield curve environment. In terms of the customer impact, I'll let George talk to that, but
Right.
you haven't seen much movement in rates, so it's not having a big impact.
Okay. Well, George, talk a little bit about that. Let's see, what are you hearing from the commercial real estate side, from real estate developers, brokers, you're the folks you deal with.
Yeah, I think for the most part, Jeff, people have made their peace with kind of rates. I think there was a point in time where people might have been hesitant to see where rates are going and what they were doing.
Mhm.
But if people are going to go out and they're going to buy equipment or invest in real estate or expand a plant, the rates aren't, while they're important, they're not deterring financial decisions at this point.
Okay.
So I think people realize that the rates have kind of normalized a bit. The long term has been pretty steady, and I think people are projecting it to stay that way.
Okay, well, that was actually the next question I was going to ask you was whether what's going on with interest rates was actually affecting people's decision making. You're saying it's not that the rate environment, the rates where they, or at least the level that they are now, is not something that folks are really considering. They're just going about their business at this point.
Yeah, that's the way we see it here. Like I said, there was a point in time where people are saying, "Well, let's see if rates come down. Let's see if they're going to go higher." And there's that uncertainty. But I think that's normalized a bit, and you don't see that as much anymore.
Okay, and in, I mean, obviously, there's always uncertainty. You can't predict with 100% accuracy what the Fed is going to do at any given time. But they have tried to become more transparent about it. We don't have the days now where everyone was trying to figure out what the Fed was going to do by watching the size of Alan Greenspan's briefcase as he headed up to Capitol Hill. Um, and there has been a lot of talk coming out of Washington about interest rates and where they might be going. Does that talk? I mean, is there too much news coming out of Washington about interest rates? I mean, Chris, when you hear what, for example, the White House is talking about in terms of a new Fed chair, are you concerned at all about that?
Well, it's interesting, Jeff. As you talk, transparency is wonderful, but there
Hmm.
does come a point where you're spending a lot of time and energy on things like a quarter point move in the rates that probably has very little impact on the real economy.
Okay.
So it's kind of sending these distorted signals. And the bias is probably towards an easing now or lowering of short-term rates. I'm actually in the other camp. I think we should kind of wait and see
Okay.
because inflation can be an incredibly difficult thing to weather. And the second time inflation comes back, it's always worse than the first time.
Hmm.
So, generally we'd expect that there would be a short-term reduction in rates. But interestingly, like most of the customers we deal with aren't impacted by short-term rates. They're
Okay.
impacted by if you're a commercial real estate borrower, it's the 5-year treasury yield. If you're a residential consumer buying a house, it's really keyed off the 10-year. And weirdly, you could see a situation where if we ease on short-term rates, the longer term rates creep up and it does the opposite of what you expect. So you could see a cut in short-term rates and an increase in mortgage rates, and that would hamper the economy a bit.
Okay, well, that was the next question was the White House does seem to be interested in seeing a rate cut. What would the effect of a rate cut now on the economy, given the way things are, and the economy in general? First, Chris, and then George on the real estate side from what you're seeing.
So I think if we do get a rate cut, and we'll know well later today, right? If they're going to cut now, if not now, they'll probably cut in January. I think if
Okay.
you get a cut, you're going to see the short end come down, so that will impact people's credit card bills. It will impact, home equity loans, those kinds of things. It will have an impact on the economy and provide a little bit of extra cash into people's pockets. but it's
Okay.
not going to spur a big change in mortgage rates, which I think would be one of the things you'd look for to see stronger growth. So I think it's rather benign. I don't think you're going to see much of an outcome from it, which is why my bias would be to stay focused on inflation until you know you have it beat.
Okay. And George, again, from the real estate perspective, what would you think of what would a rate cut have any effect at all at this point? Given what we've just said, that folks aren't really paying that much attention, or at least not it's not a huge factor in their decision making. Would it matter that much?
Yeah, I don't know that it would. I think when you think about things like the housing market, right, it's not really the rates that's driving it today. It's really more of an inventory discussion. When you
Okay.
look at New Jersey, in 2022, there was roughly 19,000 homes for sale. Today, that number is around 12,000. So when you think
Mhm.
about that compression in inventory, that is a bigger driver. I'm not saying people aren't paying attention to rates, but the availability of inventory in New Jersey, particularly around residential property, is a bigger driver.
Okay, that's interesting that you say that. I saw an interview that you did earlier this spring. You made that exact point about inventory being low. That's still the case. The inventory
Gotten
has not
worse.
improved. Pardon?
It's gotten worse.
Gotten
Yeah,
worse. Okay.
yeah. When I talked in the beginning, that number was 13,000, not 12,000. So that market has actually tightened up, continued to tighten up a bit.
Actually, it's a
Okay.
perverse thing here, Jeff. You think about it, right? If you lower mortgage rates, people can pay more
Right.
for that house. So
Mhm.
when you have a constrained supply where there just simply aren't enough housing units, and you lower rates, it's more money chasing the same number of units.
Okay.
It drive prices up.
Okay. Now that's an interesting point too, because what I would hear a lot back when rates were a little bit higher was that folks who had locked into a low interest rate were not interested in selling because they didn't want to get a higher. They didn't want their new house. They didn't want to pay more a higher rate on their new house. But that's not the dynamic that you would expect at this point.
Well, we're still seeing some of that. And I think that there's going to be a natural evolution where you want to hang on to that 2 or 3% rate as long as you can. But at a certain point, life intrudes. You have a couple of kids, you need a little more space.
Right.
You move because of your job, you retire, there are deaths, there are all sorts of things. So I think we expect within the next couple of years, you're going to see more of that inventory free up. But really, the housing policy questions in New Jersey are about the structural cost of housing.
Okay.
The cost of what it takes to build a new unit, to get new units, the approval framework, real estate taxes, even things like the mansion tax, which you would say, well, that only applies to rich people. But when you free up a valuable home, a highly valuable home, someone moves into it, someone moves into their home, and there's a cascading effect that down the chain, somebody gets an opportunity for a more affordable home. So
Right.
it really is about the units of housing availability, and we need our policies to focus on that.
Okay, I want to get that in just a minute, but first I want to go back to the question of consumers and how they're making decisions. Again, George, back in the interview that I saw you do, you mentioned that you weren't. The question was, are consumers changing their behavior given all of the uncertainty in the economy, the interest rates, the interest rate environment, et cetera? You said you hadn't seen it yet. Are you still feel that way? The consumers are still an important driver of the economy at this point. Consumer spending, I mean.
Yeah, we have not really seen a notable difference in consumer spending. You see
Okay.
a slight uptick in consumer credit card debt, that kind of thing, but it's
Mhm.
not really been problematic. And when you look at things like, planes are full, restaurants are full, those kind of things, our customers have been fairly resilient. We look at things like FICO drift, and
Mhm.
actually FICO drift has drifted up, so you're seeing a better profile
Okay.
from the consumer. So it's been relatively stable.
Okay. All right. And because I was asking that because I think the conventional wisdom seems to be that if they see, a house, for example, is the largest investment many folks make, and if they see the house value go up, they feel flush and they start to spend more. And given everything, it sounds like housing values are going up, and consumers should feel pretty good about themselves. Yes.
They certainly are in New Jersey. So
Okay.
there's an interesting story here that the national numbers are a little different than what we see locally. So in jurisdictions where it's a little easier to kind of get housing built, so think Florida, Texas, the kind of the sand states, Arizona,
Mhm.
you saw a lot of new inventory coming on board. You're talking
Okay.
tens of thousands of net new units. Prices in those areas are actually declining. So you're seeing prices decline in Florida, you're seeing it decline in certain parts of Texas, especially around Austin.
Mhm.
But we're not experiencing that in the Northeast because we've got, it's so difficult to get things built here. You don't have the ability to add units to the market. But so you're seeing better prices in the Northeast, lower prices in other areas. So it's not a uniform experience across the country.
Okay. All right, then let's talk about affordability. I'm going to ask the two of you to solve that problem right now. I know the greatest minds in New Jersey have been trying to figure this out for years, so I've got two of them right here. You mentioned policy, some policies that have to change. What would change? What could change? What could New Jersey do? What could the state government? We've got a new governor coming in. Are there policies that you think would help the affordability question?
Yeah, I think, it really comes back, as I mentioned before, this is the math is very simple. It's about units. We have a growing population in the state, and we are not growing the housing stock. So we have to solve that. I think if you had a magic wand, there's probably two very specific things I would do. The first thing I would do is I would regionalize the ability to get entitlements to build homes. So think
Okay.
housing variances and zoning and things like that. And that's a powder keg issue. But if you moved zoning decisions to a county level and not a local level, you could make really informed choices about where we could responsibly add density to the housing stock. If you think
Hmm.
about our home county, Monmouth County, we have some great urban areas, folks in, Long Branch, Red Bank,
Good bank,
those
right.
kinds of areas. You might concentrate and allow a lot of development there where it's low impact to the environment. There's great transportation, there's terrific utilities, but solve it that way instead of having 600 or so municipalities kind of doing the not in my backyard equations. So I would regionalize planning and zoning. That would take a statewide effort. It would be hard to do, but I think it would make a difference. The second thing I would do is we have an acknowledged issue around property taxes.
Hmm.
And I think there's an opportunity to rethink the property taxes for new homeowners, especially homeowners going into new housing stock, to say, let's make that new housing stock super attractive to the consumer.
Hmm.
One way to do that is these are net new units.
Right.
So they weren't paying property taxes last year. Just say we're going to, a lot of jurisdictions have done this. We're going to exempt property taxes on new development for between 5 and 10 years. And you can add an affordable component to it and say, look, 10% or 20% of those units must be affordable for 100% of the units to get the short-term 5 to 10 year tax holiday. But
Hmm.
if you do those two things, you get a clearer path to develop and you have better structure around property taxes for net new units, you're going to see builders coming to be great for the economy.
Okay, well, that's what I was going to ask George. I mean, those sound great, and I haven't really heard a lot of discussion about those kinds of ideas before. I imagine George, builders would like this. I mean, the folks that you talk to, they'd love to see that kind of thing.
Oh, for sure. I think we see people see dirt moving around. They think it's a relatively quick process because they see the development go
Right.
quickly. That was years and years of legwork that got put into being able to have those developments approved and entitled. The other interesting thing is a bit of adaptive reuse, right? Where you have some vacant properties and things, finding ways to put those on the housing rolls versus building new things in new areas, right? That's to Chris's point where there's already infrastructure and they've already cleared and there's already a use there. It's just not the right one. Adaptive reuse could be an interesting concept there too.
Thank you.
Okay.
George raises a great point. If you think about the state intervention to protect the pinelands, to protect the highlands, we have a precedent for the
Coast,
state,
yeah,
yeah,
sure,
stepping
yeah,
in to say you shouldn't build this way there.
right.
The state could also step in and say, look, if you have a used corporate park that's beyond its useful life, it's already been developed, as George points out, that there should be a fast track that the municipality cannot prevent the adaptive reuse of abandoned corporate buildings that could be made into affordable housing developments and take it out of the local level.
Okay. Is there a lot of resistance to that? Because that's, I mean, I've heard a lot about adaptive reuse and about transforming some of these properties, because no one likes to see an abandoned building sort of sitting in the middle of a giant vacant parking lot. George, are you still hearing about resistance to those kinds of things?
Well, I think it still takes a lot to get done.
Right.
So that it's not, I don't know that there's a formal resistance other than to Chris's point, if there's a way to fast track those things to make it
Okay.
more attractive for developers to invest their capital there.
Okay. George, I'm curious you about the commercial real estate market generally. For years now, the industrial market has been incredibly strong. Office, not so much. What are you seeing now? Are those trends continuing, or has industrial cooled and is office picking up? Multi-state, multi-family residential. I mean, how's that doing? Just give us a little look at what the commercial real estate market is like right now.
Yeah, it's an interesting question. On the industrial side, we actually saw that market cool a little bit in 2024. The
Okay.
vacancy rates for industrial actually crept up to around 19% in
Hmm.
and around New Jersey. Now that's because there was a lot of deliveries. Now that trend has reversed a little bit as some of that inventory has gotten absorbed.
Okay.
The vacancy rate is down in that 14, 15% and heading in the right direction there. You mentioned office. I think everyone knows office is a bit of a tricky
Yeah.
asset class today.
Right.
Vacancies in some New Jersey markets are as high as 27% for
Wow.
office.
Okay.
Interestingly, in southern New Jersey, that vacancy rate is like 13%. So
Really? Okay.
it's a different asset class. It's a different uh, building, and it's one that's getting used. Retail in New Jersey is remarkably steady.
Okay.
Vacancy for retail properties in New Jersey hovers around 3%. I mean, you think about you're talking about Amazon and all these deliveries, the home deliveries that people don't go to stores anymore. Vacancy is only 3% for some of these New Jersey for the average retail center in New Jersey. It's a pretty tight market.
For the average retail, because
3%.
like Class A properties have always been fairly strong, even in New Jersey. But even
That's
even when you go below that, it's still
it's the average, yeah, right across the board. Neighborhood retail, listen, especially if you get into grocery anchored neighborhood retail, but really any neighborhood retail, it's a very tight market.
okay. Interesting. All right, that interesting point there. All right. I'm curious then where all of this leaves your bank and regional banks in general. What do you, Chris? How do you see the business climate right now for bankers, for people like yourselves, and for Ocean First in particular, and for your peers around the state?
I think we have a great opportunity going into 2026. So I think that think about the first half of the year. I think it's going to be a reasonably strong economy. What you're going to have is a really strong tax refund season, which may sound strange, but
Mhm.
remember, we made the tax law changes in the middle of the year. We made them retroactive to January 1st, which means that withholding is higher than it should have been.
Okay.
And people are going to get on average probably an extra $1,000 in their refund in the spring. So the studies will show when you give the consumer money, they spend it. So I
Absolutely.
think the first half of the year, you're going to see a reasonably strong economy. We are seeing the tariff situation stabilize to the point where people can make decisions and lean into things. So we have good and interest rates, I think, are reasonably benign. I don't think they're going to make much of a difference, but I think that they're not going to hurt us for sure. And then on a very local level, Jeff, it's going to be a banner year for New Jersey. We have World Cup. We have the
Right.
250th anniversary. We
Mhm.
have in our own local market here in Monmouth County, you've got Netflix, in the ground building out what will be the largest film production studio in the United States. And lots of other things going on. I know I've mentioned to you in the past that we've got the Springsteen Archive and
Right.
Center for American Music opening up at Monmouth
At Monmouth
University.
University. Right. Yeah.
That'll
Sure.
open in, yeah, that'll open in June. So there's lots going on, and I think that positive sentiment, the consumer having a little extra cash in the beginning of the year, a little less noise in the geopolitical stuff,
Mhm.
and then we should all, pray and hope that Ukraine gets settled at some point in
Right.
the next couple months, and that would be wonderful everybody involved.
Okay, well, since you brought up next year, I almost always ask you about the business at the shore and tourism and what you're expecting. I thought December is a little too early, but since you mentioned the World Cup and the 250th anniversary and all the things that are going to be bringing people to the state, are businesses along the shore expecting that kind of banner year next year?
Yeah, we don't have the data yet because usually as it gets cold, as it has this week, right? As it gets cold, people start around the holidays talking to family and thinking about their plans for the
Right.
shore season. So we have pretty reliable data we track in reservations beginning in probably mid-January, where you can see reservations as the same date every year and kind of get a sense for them. So we'll have that information in January. One of the really important things, though, and George can talk to this, is seasonal businesses have had a good run for several years. So that's
Right.
left them in a pretty strong position, not a lot of debt, plenty of cash. They're feeling pretty good, George. Is that fair?
Okay, yeah. So
Yeah, sure. And seasonal business and just our business clients in general have experienced a couple of good years. Balance sheets are very healthy. Companies are continuing to invest. I think to Crisp's point before, the tariff noise and all that has been relatively settled. So our commercial client is feeling pretty good too.
okay, and again, I'll just going back to this. You mentioned the tariffs. There's still concerns about immigration. That was a problem with visas for a lot of businesses on the shore. Are they expecting to see that problem is going to continue?
Yeah, I think that that's going to be a status quo
Okay.
situation where it's going to be a challenge getting seasonal workers in. Although I think every year that goes by, the business owners get a little bit more adept at dealing with it. They know how to
Okay.
adapt to the new rules.
Mhm.
And I remember a couple of years ago, they started making investments in workforce housing so they could house the people that they could get. So it's not great, but I think it'll be the kind of the same not great that it was this year and the year before. And I think the world is adapting to it.
Okay. We talked a little bit about tourism. Are there any other industries that you think are particularly you're expecting some particular strength from or weakness? I'm thinking particularly, George, in the case of healthcare for commercial real estate, because we've seen a lot of activity of transforming transformative reuse of some of these older properties into medical offices and laboratories and things like that. But I don't want to put words in your mouth. Healthcare one. What else? What other kind of industries are you seeing that may provide some strength?
Yeah, I'll let Chris talk about the healthcare one, given his involvement. But it's no secret that there's a ton of spending and investment being made in the healthcare segment. So that,
Right.
you see a lot of buildings being improved. In terms of other industries, I was talking to a couple folks in preparation for today, and we have clients that span really every kind of industry, right? So
Mhm.
we have a company that manufactures in the stainless steel arena. They're seeing banner years as in the pharma and food business, and it's almost like a reshoring. Some of that stuff that was sent overseas now is being manufactured here, and they're seeing bolstered revenue as a result of that. We have another company that manufactures cleaning type supplies for restaurants, and while he saw some level of impact from tariffs, they were smart. People have got really smart on how to move their inventory and supply chains around.
Mhm.
And they move it from one originator to the other, and they end up doing a little bit better. So, it's really right across a bunch of different industries, Jeff, where we're seeing,
Okay.
just healthy balance sheets, good cash balances, and manageable debt.
Okay.
I think you see a couple of things, Jeff, in healthcare that are really encouraging. First, in New Brunswick, we're going to see that the massive
Oh yes. Mhm.
investment in the hub come to fruition. It's growing every day and kind of hitting the point where it's really going to start to make a
Right.
difference economically.
Mhm.
And then we've got a very long-term story of the healthcare systems coming to meet their customers where their customers have the need. And
Right.
you see this in these ambulatory care sites, so
Right.
kind of care outside the hospital. And as George was referring, these are the incredible investments in a number of healthcare systems. I do some work with Hackensack
Mhm.
Meridian. We have about 500 care sites outside the hospitals. The investment in that space is breathtaking because people want to get those services closer to home in locations that are more convenient, in settings that are maybe more accommodating than a hospital.
Mhm.
And the good news is it's less expensive. It's less expensive for the consumer. It's less expensive for the healthcare provider to provide things that way. So think about radiology services and pharmacy services and oncology. These are all kind of migrating to be kind of in your neighborhood and around the corner.
Right, and you mentioned Hackensack. I mean, they have a major project in Metro Park with
Yes.
the new headquarters and the bringing healthcare to commuters who are on their way home from work or to work. So that
Yeah, that's fascinating too, Jeff, because in that project, that will be both the headquarters of Hackensack, which is
right,
important, but it
mhm,
will be a clinical site.
right,
There will be an ambulatory care center within that building so that folks that need medical care can come right in off the train, walk across the street, get their care. And I always love when you combine the end experience, the client experience, in this
right,
case, care,
mhm,
with the executives who will be sitting in that building too, and they'll see their clients every day.
right. Okay, right. Well, you've been very generous with your time. Just one more thing before I let you go. You mentioned that you at the bank are confident about, or at least I hear what I thought you heard you saying about what the economy is going to look like next year. Are you hearing the same thing from clients and customers? Are they as optimistic as you two seem to be about what next year is going to bring?
They're pretty optimistic, but you talk to more of them, George. So
Well, it's an interesting thing with businesses. They see the good and bad, but for the most part, they tend to be very optimistic at this point. And and there's signs of that, right? Where we um, see some smaller roll-ups of acquisitions of companies, things that you don't see the headlines for, but companies that are growing their balance sheets and growing their operations through some acquisition or some organic investment. People don't invest and they don't buy things unless they feel pretty healthy about what
Right.
that's going to look like going into 2026 and beyond.
Okay, very good. All right, Christopher Maher, CEO of OceanFirst Bank, and George Destafney, Executive Vice President, Chief Commercial Real Estate. Thanks for joining me. I appreciate you taking the time. I hope you come back and we'll talk some more about how things played out.
absolutely. Thanks, Jeff.
Sounds great. Thanks, Jeff.
Thank you too, and thank you for watching. Until next time, stay safe, everyone.